being an entrepreneur sounds cool, but the reality of building a business is very, very difficult. Every level that you hit, there's a lot of things that suck that you just won't want to do. What you're capable of is on the other side. I don't feel like it.
And if you're committed to what it is that you're trying to do, nothing is going to stop you from getting there. Welcome back to the Real Business Owners Podcast with myself, Trevor Cowley. Today I have a guest, Jay Tobey. He's the owner of North Star Financial Group. We connected through a mutual friend, Travis Chappell. Shout out. Travis is the owner of a company called Guestio, where they do podcast guests. And so we have that mutual friend. And as an investor in Guestio, these two knew each other. You know, Travis vouched for Jay and said, hey, this is good people. So I'm excited for you guys to listen to this episode. He's an individual that raises funds for people that are looking to have their money make money, but maybe they just don't know how to do it. So I had some interesting questions for him. I think you guys are going to enjoy today's episode. So as always, if you're ready to level up, go to joinrbo.com. Enjoy, guys. So you started investing into real estate, being involved in property management. Then what? All of a sudden you had an opportunity one day and said, hey, I want to start raising money.
Yeah, I learned basic real estate skills at conferences, at investor meetups. And then I got to learn property management and basics is like really important to the investing strategy. And so one of the investing strategies I learned is the basics of flipping. You know, if someone finds a deal, which I would say is the basics of investing in general. Someone finds a deal, someone's going to manage the deal, and someone's going to bring the money. All three sides of a pyramid. And what I did is my two family members were moving, and I had friends that had done some flips. My family knew they were not going to get market rent for those homes. And so we negotiated with my family, and our friends ran the flips. And so what happened was I brought the deal, they managed, and they said, hey, if you could find the money for the flip.
And the money for the flip. So explain that. When you say money for the flip, does that mean
rehab costs?
Exactly. Find like the rehab, like 50 grand or 100 grand. Let's dress it up or whatever it is, right? Exactly. Redo the kitchen. That's what you mean by find the money is whatever it needs to be updated. You would have maybe, hey, 25 grand, 50 grand. Let's find this money. And then you would offer that individual what, like a 10% return or
10 to 12.
Okay, within what type of time frame?
Yeah, usually I think it was 6 months, something like that. Okay. But they were also, what happened was I went to my neighbors, these mentors, and said, one of them in particular, it was the first time I had ever asked someone for money in that way.
Yeah,
I said, I've got this house, we've got this strategy. Can you do 15,000? It was 15,000. I was so nervous.
Yeah,
and he looked over my numbers, probably to make sure that I was not being dumb.
Yeah.
And he said, yeah, that looks good. He made a little promissory note and we did it. I probably spent 2 or 3 hours on the entire project, mainly talking with him and my friend. And then all of a sudden I got a big check. Big check, relatively, let's call it 30 to 35,000 for a few hours of time using someone else's money, someone else's time. And I started saying, okay, well, that was interesting. And we did it on the other family member's house. Same thing, got a very similar size check. Leveraging now my mom, I said, hey, Mom, do you want to earn interest on some money? Like, let's do this. Getting my family involved. It was funny because the three things people don't talk about are politics, religion,
and money.
And money, I started realizing was not a problem for me to talk about. I was very open to talk to people about, what are you trying to invest in?
What are you doing with your money?
What are you doing?
Yeah.
This is what I'm doing.
Yeah.
Do you want to be involved in some way?
Yeah.
And it really happened like that. So we did those 2 flips. I realized I did not want to do flips.
Did you ever lose your money on any of the flips?
I only did 2. And then my family stopped moving. And then my joke is, my family stopped moving. So I'd sit on the flips.
Leads dried up.
The leads dried up.
Yeah.
And I knew that was not a passion. Walking through kind of a nasty, I see John Maxim, who flips a lot of homes on Instagram. What he walks through every day, it's not.
Yeah.
I wanted to be a little cleaner.
Seems like more of a high stress lifestyle.
Yeah.
The fix and flip, right? Because there's always stuff that goes wrong, in some of those situations, because there's always something unforeseen behind the scene. There's mold or there's this or that, and it throws a 30 grand expense that you didn't really calculate into that flip.
And you've got the
on the,
was there on your back. We got interest accruing, paying.
We got to get it done and we got to get it sold,
Didn't seem like the thesis I really wanted to go after, but it did teach me. I said, okay, I actually really like the raising money part of that triangle. finding deals is fine. That naturally comes. Managing them, but really the raising capital was the most interesting part to me. And so it really happened organically that I talked with a friend who then talked to another friend that then talked with a family member, and it just started to grow. And all of a sudden we had taken down big apartment complexes. We had taken down multiple businesses. We had
taken down, in other words,
I guess bought.
Yeah.
Yeah. Until we had call it tens of millions of dollars that had come our way.
Yeah.
And it's literally just, the Jay show. And so over these last few years, I said, okay, I should really start to get more professional within the approach of I'm handling capital.
Yeah.
And so I need to be able to make sure that it's, I have the best on the team, like you talked about. So that's what started North Star Financial Group, is the good problem of too many investors coming through our doors and making sure that we took care of them in a deliberate manner, made sure we checked all the boxes.
So people came to you and said, hey, I've got money, I want to invest with you. What are you up to? And then you find projects to invest, and, people are receiving dividends on a monthly basis, quarterly basis. Like what is
usually quarterly?
Usually it's easier that way.
Yeah. Cause I was always less work and they can get bigger checks, which makes them excited.
Yeah.
And what I was always chasing was passive cash flow. I found an apartment complex. Here's the strategy of
steady
of how it's going to be a steady project. I found this company. You want to come along? We've got a good operational management team, and this is like the steady. Now, there's been bumps in the road. I would say if anyone came and said they've been a perfect investor, they'd be lying to you, or they just haven't been in it long enough. But it's what I've seen is how can you treat your investors and make sure you're transparent.
Yeah,
let them know what's going on. And
so when you buy like an apartment building, let's say, for instance, so let's say you raise money, are you getting debt on top of that money? So are you going to get a loan? So you're taking investors' money as a down payment. Then you go to the bank and then you say, hey, I've got $1 million that I want to put down on this $10 million piece of property. Can we write up a loan? And then the loan goes in whose name?
Yeah. Oftentimes we're trying to find non-recourse loans.
Okay. So which means that
you're good. You're not signing personally on that loan.
Okay.
Or I might be signing personally, or someone else in the partnership might be signing personally. We've moved from kind of these one-off deals to more of a fund structure.
Yeah.
So the funds are the ones signing on the loan.
So it's just an entity.
Just an entity. Yeah.
So, I mean, obviously the entity has its owners and managers and things like that, but there's not just an individual personal guarantee anymore. It's more of the fund is saying, hey, we'll back it, we'll cover
Here's the assets we have. Now, when I was starting, to help those that are thinking about going down this road, when I was starting, you have to take on a lot of risk. Let's call it the manager of the project or manager of the LLC. You're taking on a disproportionate amount of risk compared to what your investors are, because you're trying to protect them. Money is always the most important in the deal. Who's putting in money? And I would always invest personally alongside all my investors. But I was saying, hey, if push came to shove and this project and strategy that we talked about did not go well, I'm going to take some of the brunt of that.
Yeah, your ass is on the line, yeah.
And so that's why I didn't want any of them signing the bigger loans or any loans, because then that holds more liability to them.
Well, they would be taking on debt, right?
Right.
To essentially, right? Which essentially they are, but really non-essentially, because their name is nowhere attached to it, right? So the idea is if it doesn't work out, they don't have to cover some, $100,000 a month payment or something like that, right?
Exactly.
And that's where you come in, is you're putting your ass on the line. They put their money on the line. You find the deals. You invest along with them on the deals, and then cut checks quarterly.
Correct. Do all the taxes. And I've learned over the years that I needed more control within the deals, because that means is when I first started, I was really I would find a good operational partner. I would be on the investor side of things.
Okay.
They would be more on the operational side of things. I've changed my opinion on that kind of over the last few years, that you need to have a lot more, at least say in some of the operational things that go on. Because, for example, tax returns. I've got my investors and they need tax returns. We need them on certain days.
Well, we need them on. To be quite honest with you, I've invested in plenty of different things.
Yeah.
And the tax, getting like your K1s and stuff like that, usually that's one of the last things that you track down.
And you have to track it down.
Yeah, is the K1s after you've made an investment. So it's like all your business dealings that you actually manage and that you have control over, like you were talking about, you have all your K1s ready to go. And it's like, well, I can't even wrap up my taxes because I gave $250,000 over to here and we still haven't received anything from it. And so
that's where North Star Financial Group really came out of, is saying, I want to be just world class in investor relations, making sure that the investor on that side is taken care of. To do that, we have to have some teeth on the operational side and really hold those operators. If we're not operating it, North Star or one of its subsidiaries is not operating it, we need to hold those operators to a higher standard so that we can keep that agreement we have with the investor.
Yeah.
And that led to, right now, our biggest vertical is actually, funny enough, drug rehab, mental health. My very first personal investment was into a rehab. I said, if I'm going to get into the investment world after these flips, I should probably do something philanthropic. And so the thesis of that facility was going and helping like the really people on Medicaid, which is, they've hit the rock bottom of life.
Yeah.
And so it was really good. It was philanthropic. And it also, what I realized over the few years of being on the board and being around some amazing individuals, family offices, people that had big exits, was I could use my real estate background and my kind of quasi-private equity background and make a huge difference in these people's lives, because it's a very fragmented industry. And so that's our main vertical. We also have like a hotel vertical, actually. It kicks off great.
When you say vertical, are these just separate funds, really?
Separate funds, yeah. Separate focuses.
Yeah.
So those are the two focuses we have, right?
Is hotels?
It's hotels, funny enough.
Really?
Yeah.
Do you feel like the hotel industry is even taking a hit with Airbnbs? Because sometimes when I drive around and see hotel parking lots, they still seem full. And I always wonder, I'm like, how the hell did all these hotels in this entire town sometimes fill up and people can't get a room? And all the Airbnbs are, it's like, has traveling just skyrocketed, or what's the deal?
One thing that I think the hotel industry has done really well or bad, depending on what side of the table you look at, they've really gone after the Airbnb space. Like, there's cities that it's technically, I think, illegal to have Airbnbs.
Well, there's those. They do exist, but then all of a sudden, out of nowhere, you'll see cities starting to say, okay, well, we put a cap on it.
Yeah, you put a cap.
There's no more, right? They start capping it because then it's like, okay, well, the hotel spaces helped you guys. They built in your city. They've helped bring tourism and money into the city, and now you're
turning your back on
them, right? And so I think that, obviously looking at it now, having the conversation, I could see them wielding a certain amount of power inside of, the city councils and things like that, and city council kind of being,
we're bringing in.
You've been around since day one, so sorry. Let us find some middle ground and maybe put some caps on it, right?
Yeah, and the unfortunate thing for, I think, some of the Airbnb owners is that they're not consolidated like the hotel industry. They're not banding together to go lobby the state against the hotels, and so that's the one thing that I think has kept that industry. Because I thought for a while, I was like, man, the hotel industry dead.
It might be the next Blockbuster,
yeah,
right? Where it goes belly up, and you're like, okay, well, Netflix and Redbox and all that took over all these, movie rental places and just put them out of business. And so that's what I was thinking. And then it just seems like as time goes on, it's like, okay, hotels are just as robust as ever, is what it feels like, is what it seems like. I know, and I don't know.
The craziest thing about the hotel industry is that hotels buying and selling seem like they hardly trade hands, because they're usually, if you get a hotel that's really churning and burning, it is a cash cow. We have two right now that we've under it, that we've done due diligence on, which means that we have looked into them.
Yeah, you looked at the numbers. You probably did some inspections, stuff like that.
They're making 20% cash on cash before we even go and make them a little operationally better, which means that we're making 20% cash return each year. And it's because that owner has held them for 30, 40 years. He's held them forever. what he's doing is he's selling off some of his smaller, call them 50 to 200 door hotels, and he's going after like a 400 to 500 door hotel.
So he's offloading to go bigger too.
Yeah, because now if you think of him as a manager, he's managing 5 in 3 states.
Yeah. Versus
and he's
one
been
big
doing
one.
it. He's been doing it well. And so that's what's been interesting to see is these hotel guys will hold on to them. It's a tough industry to break into.
Yeah. So when you say 20% cash on cash returns, that's not factoring what their current overhead is it? Or you're factoring in your purchase price, and you're running your numbers based upon the information that you have going into it, which is probably the purchase price included.
Yeah.
So if you're bringing in 20% cash on cash return and they've owned it for a while, they're probably doing a lot better because they're going to be selling it to you that property's appreciated over 10, 20 years, right? So is there ever a plan to exit, right? Do you ever present like, hey, what we're going to do is we're going to go in, we're going to buy this hotel. It's going to be, 13% cash on cash return on an annual basis. In 10 years from now, we plan on flipping it. And do the investors, if you ever do that, do they get a chunk of the money on a flip as well? Or do you guys never plan on doing anything like that? Does that make sense? Is it just their money that's making them money? Or do they kind of have a little piece of the pie if you ever do flip the property?
Yeah, they have a piece of the pie on the upside as well.
Because the fund is the one that owns the property.
Yeah, and they own a piece of the fund.
Gotcha.
So they get proportionally to what they have invested in.
Right.
They get the upside to that. So, for example, the group that we have partnered on that fund, they've already done $12 million in distributed capital back to their investors.
Mm-hmm.
Some of those have been on hotels that they sell.
Mm-hmm.
The 3 things investors always look for are above return. Everyone always is like, what's the return?
Yeah.
But the 3 things I see that have moved the needle.
Yeah. Return. And outside of that,
I learned this from my very first real estate deal. A guy who had sold his company for a couple $100 million was one of the main investors. And he said, how do I protect my downside? Everyone in the investment world, you'll never see anything that doesn't go up and to the right, meaning this will just go. It'll just.
Oh, yeah. When you get presented a pitch deck, every pitch deck that you get that says, hey, invest into this restaurant or this business or this apartment or this whatever. It doesn't matter what it is. A pitch deck is that. Yeah. They're pitching you to try to have you part with your money, right? And so in order to do that, we value our money, right? We want to protect it and we want it to make more, right? Those are the 2 things that we want. But every pitch deck I've ever seen, man, they're all home runs.
Everything.
Everything's
always a home run.
Yeah.
And so what I learned from him, and obviously he had a career of protecting his assets, building generational wealth, is he said, how are you protecting my downside? And the upside will take care of itself. So if I can protect my downside risk, like at the end of the day, if this whole enterprise goes to zero, are there assets that we can sell? Mm-hmm. Is the building worth something?
Yeah.
How can we at least protect that I can only lose 50% of my investment rather than 100% loss? The 3 things I always look at that I've seen in my career are investors are looking, how is my money secured? Meaning, is it kind of the conversation
by real estate?
Backed by real estate. If it's not, do I get more upside? If it's unsecured or am I getting more shares? Yada, yada. How's my money secured? How is that money being returned to me? Are there quarterly distributions? Mm-hmm. If there's no distributions, is there a big sell?
Just an exit.
Yeah. How is my exit?
Yeah.
And then what are the mechanics or the mechanisms that cause that exit or that return of money? Do we have to, in the hotel space, do you have to be at 70% occupancy to be above your return? If so, how are you going to accomplish that? Of course, every deck you'll ever see is we're going to be 100% full every day of every week.
Sure, seems like it. Yeah. What's your rebuttal on the skeptics of like, you're not going to take care of my money better than me?
That is a good question because I literally ran into that this month. Yeah. We had an investor that had a couple exits.
Yeah.
He had always invested in himself and he had a great return. Yeah. Great track record.
Yeah.
But he was also getting a little older. He was like, do I really want to start another company? I've already made some very successful companies. I mean, obviously he had a financial advisor, a wealth manager, people to but he'd never invested in a fund or invested into like a private enterprise.
Yeah.
And so we were our first one. How we kind of did it is being very transparent. And like I said, showing him what the return structure is like. You know, he believed in the mission of what we're doing in the drug rehab, mental health space as well.
That's what he wanted to do, is in that side of things.
Yeah.
More so than the hotel.
More than the hotel.
Yeah.
I think he's investing in both actually, because the hotel is 100% real estate. So it's pretty consistent, some good returns there. But he did want a little more upside, which is what the drug rehab, mental health side.
That's considered your high risk portfolio.
I would actually call
technically, or what?
Still pretty conservative, but it has a little bit higher bump because you're owning businesses. So we're investing in some businesses. We're investing in the underlying real estate, but we're also running a full rehab on top of it, if that makes sense. So there's a bigger upside with a multiple on that fund than there is on the hotel.
Which one's the easiest to manage for you? Is it hotels?
Hotels.
Okay.
It's similar to a multifamily. I mean,
okay. So that's why the drug rehab, I mean, it's a little bit more difficult, but with that comes a greater return.
Comes a little bit greater return.
Yeah.
So we're congregating, or I guess aggregating, the drug rehab space. It's super drug rehab, mental health, super fragmented, and we're over the next 12 months putting in $150 million into that sector.
Does insurance doesn't cover that, does it?
It does.
Oh, it does?
A lot of insurance covers it.
Oh.
Or if someone's going to go with insurance, how can we create a model where you've had an addiction for 20 years, it's really affected your life? The current model is, hey, 30 to 90 days, and congratulations, you're graduated.
Yeah.
But you're only graduated because insurance stops paying for that service. So how can we keep building verticals behind it that insurance will help step down? And insurances like that because they want to make sure that that client is stepping through, their recovery process, rather than you graduate and it's been 90 days, you go cold back to your old life. You're probably going to relapse.
Yeah, I mean, I'm back. If you're looking at statistics.
Yeah, if you're looking at statistics,
it's a high likelihood that you relapse in the same environment. So what's like the plan, like after the fact? Like, do you have like
really
a counselor
focused on
or something that reaches out to them, or ongoing mindset, or what?
Yeah, ongoing care is super important, we feel like, in this system. And so
what
we're doing is actually providing supportive housing or sober living after they graduate. And so what we see there is, and it's a real estate play, right? Like, I started seeing so many clients needing additional housing.
Yeah.
And all the places that offered it were full.
Yeah.
They had 60-person wait lists. And me being a real estate investor, you don't have to be a genius to say, we already have tons of clients coming through our system. And now they're sitting on a 60-person wait list. Most likely all these other homes or apartments have those same wait lists. So let's make our own for our own clients and the rest of the market. So we're providing that supportive housing. And then while they're going to the supportive housing, they're going to, like, call them AA meetings or one-on-ones with their counselors.
Yeah.
There's ongoing called outpatient. There's different levels to it. There's medical assisted treatments. What we're trying to do is say there's not one shoe fits all. We're going to try to buy some companies that have some specialties, how they provide treatment. And we're going to try to take clients through the system and see what's the outcome? How can we statistically prove that these clients are going to find the best outcome after 5-8 years?
So you want to find data.
We're really focused on data. Being a business owner,
yeah,
and it's such a data-rich environment.
Yeah.
I've seen a lot of, it's archaic and fragmented, and we're just really trying to say, we think we can bring a lot to them.
There's a dude on Instagram that built a big old portfolio doing the sober living stuff.
Yeah.
And exited for, $100+ million or something like that.
What's funny about that guy is he could probably go.
He's doing it again.
I've seen a few guys. So
He's going right back to it. He's going and buying up exactly what you're talking about.
I was going to make a joke that there's guys that we know that we're investing in that they're might be on their second or third turn, meaning they've built a portfolio, 50 to a couple $100 million, sold it, waited for, a year or 2 or 3 till their non-compete's done, literally moved across a few state lines,
Yeah.
and they can go build it again because it's such a fragmented industry that you can do that.
Is it that easy though to get access to money?
Hard. Oh,
But to get access to money, like I'm not talking about investor money, right? Like most people they can't comprehend or wrap their mind around getting a loan for 10 million or 50 million or 100, right? Like that's a lot of money. And so it's, if they were able to see behind the curtain, what that looks like, does that take, for instance, a relationship with a certain bank or banker? Does relationship have nothing to do with it? And it's really just, hey, let's take a look at the numbers, and the numbers are what's going to help you like, what does it look like on the other end to actually get access to 20, 50, $100 million type loans?
What I've seen in my career, which hasn't been crazy long, is it's kind of both. They want to financially, very much like my mentor, that one guy gave me that $15,000 loan. He wants to see the numbers, and he wants to make sure you're not being dumb or minimizing the downside.
Yeah.
Making sure if you're going to go get a big portfolio like that, but also you have to have that relationship. He was a neighbor. He trusted me.
Yeah.
Similar to a banker.
Yeah.
I've seen some loans get done because of a relationship.
Yeah, that maybe wouldn't have got done otherwise.
If I just went cold to that,
to some other bank across the street,
they might
probably, I don't think so.
Yeah, but let's call it one of our advisors, they had a big relationship with this bank, and this bank kind of underwrote some of the other assets that they had and gave us a loan that, that company probably wouldn't have held up scrutiny under its own, but there was some relationship there. They understood a little bit more of what was behind.
So that is real.
That is
totally real. Like like if you're ever going to want to be a big dog and raise capital and get big loans, that you're going to have to really figure out who you need to get close with relationship wise at what bank. And then in your case, it sounds like that you had a relationship even outside of the bank where they already had a relationship with the bank, right? Yeah. And so they were able to kind of get you in the door. Obviously 5-10 years from now, you'll be the guy, and you won't necessarily need him to co-sign for you, so to speak, anymore in a verbal manner. But
the interesting thing about banks is sometimes they're not there for you. This is why I had to raise a lot of investor capital. Sometimes they're not there for you when you need them. They're there for you when you kind of quasi need them, kind of don't.
Well, if you've got a relationship with them, they already probably know a lot of what your hands are in, right? And
so they can.
It's almost like negotiations, right? Is that what it kind of feels like sometimes?
For sure.
Is they're negotiating with you and being like, in order for us to do it, we would need this, or we'd have to see this. And then you're like, oh, well, would you do it if we did this? Like kind of going back and forth and hoping that
they're going to come as, not aggressive is the wrong word, but as conservative of an approach as possible.
Yeah.
And so it is working with them to say, hey.
Which means you might have to be a little bit more aggressive at, putting your ass on the line, so to speak, right?
Yeah.
Because then that brings down their
risk.
Their risk, right?
If you believe in the asset and you believe in what you're doing, it might be worth it.
Yeah.
To your point on getting some of these bigger loans, working with some of these bigger projects, when I started, a $15,000 check was wild to me. Now we're investing, hundreds of millions into just one sector.
Yeah.
And so, and then that's without even leveraging that
that's just having access to capital.
Access to capital. And so they said it's easier sometimes to go and buy 10,000 units than 10 individual units, or because you talked earlier about economies of scale. You need different relationships. Sometimes it's easier to get bigger checks. I didn't fully believe it, but now after
kind of being on the other side of it,
I'm like, okay.
It's like more is merrier for sure.
More is merrier. Sometimes we had a group that invested in a project we did. They literally wired money before a pretty big check size, before they had the document signed. We had to chase them down to say, you guys got it. We can't.
Yeah, we're not allowed to be.
It was a big check size to feel like what I felt like, but to them it was proportionally small.
Low risk.
Low risk. Here you go. And I'm like, geez Louise, guys, we gotta get this in.
Yeah.
We gotta get the legal docs.
Yeah.
And so that's been an interesting journey. I still actually love taking some of the smaller checks. We have a fund. We've worked with the SEC. We have a fund that we're launching in January. That'll take up to your minimum's $5,000 check.
So right now it's all accredited investors, $250,000 net
Yeah,
worth
actually,
or higher.
exactly. Yeah, right now it's all accredited
Yeah.
people, and I personally, coming from I'd say upper middle class background,
Yeah.
I love that. Like, we're creating a vehicle that my mom or my family could have invested in.
Yeah.
They couldn't have invested in some of the deals that we've done.
So when you're running the funds, I'm sure like Bridger Pennington up there.
Yeah.
Did you learn anything from him or take any of his courses or anything like that? Or
I didn't take his course, but I would say that most people, if they're learning about funds, because I learned from syndication, individual deal by deal,
yeah,
to go into the fund space. Sometimes I think it might have been easier to go through his fund accelerator.
yeah,
Now, I didn't, but boy, have I learned a lot from just his videos. He puts out awesome content.
yeah.
And so I go to the gym,
Cool.
I go to the gym with his dad, who built a $50 billion company. And it's amazing to see what they've done.
Yeah, I heard his dad speak a couple months back. I guess he wrote a new book called Gold, the Dollar, and Bitcoin or something like that. And have you read that book?
No, but I heard a presentation they did on gold and Bitcoin and the U.S. dollar. Blew my mind.
You talking about like the warships and the petrodollar and
what's backing the U.S. dollar and how they're using that as political leverage.
Yeah.
I mean, they're thinking at a scale.
He talks about the U.S. dollar being the United States product and that they'll protect their product. And really what the military is more so to protect that product, the dollar, than it is for anything else. It was cool. That's why I know Bridger, he's big into the funds and helping people, teaching people how to do it. And so I was just wondering if that was, something that you had experience with or not, but sounds like that you went through the good old fashioned
school of hard knocks,
figuring it out as you go. And how many years have you been involved in kind of the raising capital space? I know it went all the way back.
The
first deal you did was raising capital, but
2017 and now.
Yeah. Okay.
Yeah.
So is your goal just to continue to stay in those two verticals, is the hotel and the drug rehab? Or are you experimenting?
I'll always have multifamily. That's what's nice about the drug rehab is you have a big portfolio of multifamily kind of buried in there because you have kind of built-in tenant base.
Yeah.
And so there'll always be aspects of those. Those are the two I'm really deep in right now. I can't say where.
Yeah, you never know.
You never know.
Yeah.
But what I want to do is really get involved internationally. I mean, we first got to do more nationally.
Yeah.
But I would love to take even the rehab vertical and say, how can we help other countries that are dealing with mental health?
Yeah.
Everyone's dealing with mental health issues right now.
Would you focus on countries that have free health care?
It's a good question. But when you talk going back to the Penningtons, when you talk to them, they're at a level, they're thinking at a level that's just they're understanding the world in such an incredible oversight way.
Yeah, they're not looking at the nation.
Not looking at the nation.
They're looking at the world.
If I were to say, if I were to give, we have two sons, if I were to give them advice as they're growing up, I mean, they're little babies now, but I want to tell them I think it's becoming a world economy rather than just a country by country. I think you're able to do so much. The world's shrinking either by travel or by social media. Well, what I want to do is how am I setting up my generational family that they can play at that next level that I think is coming.
I know that Bridger himself and Dan, they have like a crypto fund.
They do.
Yeah. What do you think about crypto? Would you ever get involved in that in terms of like, a place to put your money? Because you're a money guy now, right? Like people are going to sit there. That's what I'm going to analyze. I'm going to analyze, to be straight with you. I'm going to say, is giving you my money better than putting it in crypto? Right. And I guess the answer probably is one is going to be probably slower, steady. One's high risk. It could go either way, very volatile. So it just depends, I guess, on risk tolerance is probably the right answer there, right?
Yeah. And what I would say to that is, going back to your audience, of anyone who wants to create anything in the financial services space, which is where I think we fit, financial service.
Yeah.
Is that's the exact question that people are going to ask. Like that investor that backed himself, why should I make this investment into yours? Why am I, if I'm comparing all that I have in front of me.
Yeah.
What is compelling? So you've got to make your investment or asset compelling.
Yeah.
One of the, let's call it the hotel space, is more compelling because it's pretty high cash flow. You might not get as much appreciation, but you're pretty consistent on a good amount of cash flow coming back to you. So you've got to understand what an investor has in front of them and make yours either stand out in some way. Our rehab, mental health.
Yeah.
That's an impact. You're going to get a good ROI.
So you have to know what their intentions are, right? So if you got to know the investor and they're like, hey, I want to make the world a better place with my money. Yeah. It's probably not the hotels, right?
Hotels.
But
they might already have. They might already have kind of a base portfolio of real estate.
Yeah.
And like a pure real estate play might not interest them at all.
Yeah. It's more of an impact. They feel their money has more purpose behind it, doing something else, or
kind of more capital.
Or hey, you want low risk? Do you want high risk? Do you want purpose? Do you want just steady income and you don't really care? I mean, there's a lot of questions I guess you would have to ask somebody in terms of what they value, right? Because for me, I value high risk.
Yeah.
But that's just how I play, right? And that's why me personally, that's what I've got. Quite a bit of money in crypto, which is doing well for me now. But, tomorrow I could wake up and it's, down $50,000 and it's a bad day, and then you wake up and it's up $100,000, right?
And I personally am a big fan of the thesis of what's going on with cryptocurrency.
Yeah.
I think
the behind the scenes of, you talked about something about being archaic, right? Like, and having to update some things, and the money system obviously has to be updated. Maybe that's what you're saying you're a fan of.
I'm a fan of that for sure.
Yeah.
I mean, if you've ever tried to sending money between banks and moving money around,
it's slow,
hard,
it's expensive,
They make interest every day.
Yeah.
That the money's in transit, whether it hits your account or not.
Yeah.
They're making interest still on
So
it.
what's the longest you've waited to receive money on a wire?
On a wire? I mean,
Like
wire
a
is
big,
pretty...
like a big, or
yeah,
big
so like
transaction.
A big transaction. I mean, we've waited. The biggest was still the checking system, I think, is the biggest.
Yeah.
When someone gives you a big check.
Yeah.
It's like
to verify.
Yeah, you're talking about a week or two.
Yeah.
And I was calling, we had an investor. Yeah, they invested, a couple $100,000. And I was calling up the bank being like, it's left their account.
Yeah.
It says pending in my account.
Yeah.
It's not technically, I can't use it. It's in pending status. It's been there for...
Who the hell's holding the money? Where's it going? Who's making money interest on it?
Yeah, who's benefiting from this?
Yes.
And then you start to really see the system behind it and why that system needs. And then sending money. I've never sent money overseas.
Yeah.
Other than like vacations where you maybe Venmo stuff.
Oh, yeah.
But that's where you can see, if I'm talking about a world economy with my sons, moving money internationally seems like a pain.
Yeah.
That's where I think cryptocurrency does.
Yeah. Solve a problem.
Solves a huge problem.
Yeah.
And what I would say is back the manager. So like right now, if you were to say, hey, invest in crypto with me, I'd say, don't back me on that. I learned early doing some one-off deals in the venture space that went poorly.
Yeah.
We backed that person. What I would have been better doing is backing a manager that's got a portfolio of venture deals and limiting the risk. Like what they've done in crypto is they've said, we're diversifying the portfolio. Some might lose.
Yeah.
But some might really win.
Yeah.
Hopefully you meet somewhere in the middle.
Yeah.
Rather than making bets on like
all in on one.
All in on Doge. Going in.
Hoping Elon tweets something,
Yeah, and there's one guy
skyrockets and somebody ends up being a billionaire.
One guy made a stupid amount of money off of just a meme coin selling at the right point.
Yeah.
And I think that's the unfortunate thing of you can use his example and then you can find 10,000 people that have all lost.
Yeah.
They all think that they were going to be that one guy.
Yeah. Risk tolerance is super important. I could see somebody that, and again, when you have somebody that you're talking about that made a large exit and they've got 50 to 100 million, they're just wanting they've already taken a lot of risks throughout their life. That's why they have the money that they have, right? Now it's just like, okay, how do I not really lose it to inflation? Right? Because if I park $50 million and inflation's at 9%, and now my money's just continuing to be, if it's $100 million and it's at 9%, you just lost $9 million having it sit in a bank account, right?
Even if you're at a high yield 5%, you're
still negative, right?
Negative.
And so the idea really to protect your money anymore based upon the level of printing that's gone on and may continue, who knows what's going to happen there, is, I recorded a podcast not that long ago talking about real estate is a great place to park your money for it to, one, generate some sort of trickle income. But secondly, also as a hedge against inflation, because the $1 million property, if the dollar costs less or is worth less, if it now sells for $4 million,
you've arbitraged that.
Yeah, you've got it covered, right? Because if the dollar lost its value and it just doubles in price, because not necessarily the property's better, it's just that the dollar's worth less, right? You get the $2 million out of it rather than the $1 million put in, right? And so I think you're in a unique, cool industry. Kudos for you to kind of figure that out over, bugging a neighbor and then, bugging a property man. Sounds like you've had a lot of mentors along the way, people that just kind of put their hand out and helped you through the process. And so it's pretty cool to hear your journey and hear what you're up to. How do people connect with you if they want to know either more about your funds or have questions of themselves that maybe I didn't even ask while we were on here?
Yeah, connect with us. Our website is Northstar FIN Group, so NorthstarFinGroup.com. You can learn about what we're doing in the investment space. Connect with me on Instagram at Jay Tobey 18.
Hope you guys enjoyed today's episode. Your boy Trevor has a lot of love for you guys. Appreciate you tuning in per usual. Like, share, review the show. Make sure that you're scratching our back if we're taking the time to scratch yours by sitting down and having interesting conversations and bringing you guys as much value as we possibly can. Hope you guys have a Merry Christmas and a Happy New Year.